The first quarter of 2019 ends with a red spinning top, means indecision tending down. It is a solid red spinning top, not an open box. So that does mean downward pressure continues on the market. Lots of indecision, but again, candle closes further down than the prior candle at the end of the year, December 31, 2018. Derivative oscillator is in the negative also, so we have downward pressure in the market. Now, we can see that we almost have a laminated price percent oscillator. It is below the red signal line, just barely, and it stays below the red signal line after having crossed over at the end of 2018. It doesn't want to go down, but there is pressure. Where's it coming from? Any number of things. What we do is we analyze the charts. You can fill in the news. Isn't that an interesting way to look at things instead of being led around by the nose by all the people that want to sell you commercials and hype things up on CNBC, Bloomberg, the regular news services, the Wall Street Journal and such? Why don't you let the charts lead you, and you can fill the news in later instead of listening to the news and trying to force the charts? That's what we teach here at chartingwealth.com. So keep this in mind as we continue to move forward. Now, of course, we've left the fall-winter trading zone. We're now in the transition zone. We're heading to the summertime zone. Trading is going to most likely, unless there's some kind of systemic market crash or things really just start booming, it's probably going to get pretty sucky. And again, why is that? As we get into May, you've heard that adage, sell in May and go away, live to trade another day. Lots of the volume goes out of the market. So it gets skippy. It gets up and down here and there, harder to track. That's why our favorite time of year is the fall-winter trading zone. If you have the ability to set your schedule and are really interested in the markets, then of course, that's when you want to tune in the most. That's when things tend to move the best. But we want you to practice year-round, because if you can trade in the summertime trading zone and do it successfully and invest well, practice well, then of course, the world's your oyster. You've got your own printing press. That's what we want you to have, a printing press of money. At this point in time, virtual money. We're not a stock calling service. We're an education firm. Let's explore things a little further, though, as we look at the overall charts. For those of you who aren't all that familiar with what this quarterly chart is, of course, for our Patreon members, we have that excellent quarterly chart training that I would encourage you to get into, because it will tell you everything you need to know about these quarterly charts and how we use them. But we can track them all the way back to what, 95 or so. And as you look at the chart and see weekly quarterly, we use that term so seldom, quarterly vertical crossovers, you can see that they get you in and out of the market at the most opportune times. The only anomaly we have in this entire matter is what I call the Trump effect. And that is what we see at the end of 2016 as the market was beginning to roll over. Quarterly vertical crossover going down, derivative oscillator also going over to the negative. And then, like him or not, the markets love him. Donald Trump enters onto the scene, and of course things flip around, and when he gets inaugurated president, they start going through the roof. In fact, when he gets involved in the campaigning and it looks like he might have any kind of chance, the markets turn around. Folks, we can go back in time 20, 25 years. You don't see anything like that. You don't see the market give you a fake out. But with Donald Trump entering the scene, we call it the Trump effect, things change. So what we see happening now, though, is again another attempt to move things over. Now, those of you who talk about quantitative easing, the Fed, all the things they've done in the past, what is going on here now is the monetary policy of the Fed when they start backing off interest rates. Are they just continuing to pump the market up? Are we going to see another fake out occur? can't tell you that. I can only tell you that the way our charts are moving, we see the derivative oscillator gaining downward momentum. We saw a significant drop-off as the derivative oscillator lost lots of energy and then flipped over during this first quarter of 2019 into the negative. Price percent oscillator stays negative. So again, that's the downward pressure you have on the S&P. Now, some of you might be saying, what about the other charts? What about the Qs? What about bonds? What about gold? They just don't track like the S&P 500 does on the quarterly chart, where you have plenty of time to get out and to get in cleanly. If you look at those charts, you can see they don't track nearly as well. Now, don't forget, our gold chart on the weekly is incredibly prescient. I mean, it's unbelievable when it comes to gold. And again, all of those things are subject to change going forward. The quarterly chart could stop working for us. The weekly chart in gold could stop working. How long do you use a chart? Until it stops working. And when you find charts that are amazingly accurate, you know what you do? You trade that chart until it doesn't work anymore. You have a gold mine when you find one. That's why I encourage you, backtrack. Look at different, always be looking for a total trading chart. Look at different time periods, and when you find one like we have with the S&P 500 on the quarterly, when you find one like we have on gold on the weekly chart, trade that chart again and again and again. You have a gift from God. Use it. Don't abuse it. And the way you abuse it is by not using it. So use that gift when you find it. And always when you do, feel free to share that with us here at chartingwealth.com. We love to know those special things. So let me just tune in for you to the weekly chart. And we can see I've gone ahead and drawn, and again, it's not much of a trend line. It's barely going down. But it's interesting to see where the last up movement crossed over there at the beginning of March. Well, actually at the end of February, crossed over the weekly chart, crossed over the quarterly chart going up. So it is above it right now. We do see the derivative oscillator losing momentum. Two-day chart is, of course, down. But I just thought that was interesting to look at and pay attention to. Even though the quarterly chart continues with that downward pressure, we'll see how high the markets will go. And again, who knows? We will follow the charts. We will trade them as we go along. But keep in mind that quarterly chart is, again, giving you downward pressure. So when you see the weekly chart roll over on the S&P 500, just remember that you have that downward pressure in the biggest chart to help push it down. And for those of you who are looking at long-term time periods, long-term investing, remember this important signal occurred at the end of the year. So again, make sure you understand that and how it has worked year after year after year, going back, 20, 25 years or more. Again, we only go back so far on our charts to the mid-90s. So again, it has worked over and over again, save this funky Trump effect that occurred there in 16 on into 17. Folks, that's where we are. Downward pressure continues, red spinning top, indecision tending down in this market. Keep that in mind as we move forward, as you look at making decisions in your virtual long-term trades. We love to hear from you. Don't hesitate to get your computer, text us, email us rather, cw@chartingwealth.com, mentioning text. In fact, the reason that's on my mind, just sent out through our texting service notifications that we had a weekly vertical crossover going down at the end of the week. So on April 1, April Fool's Day, and it does seem rather foolish with some of the struggles the stock market has had lately, that indeed gold is going down, but that's what we're seeing. And again, watch your charts on Monday morning to see if you have a jumping in point. And if you're not signed up for our texting service and you live in the United States, it's free. If you're anywhere else in the world. Just remember, listen to our comprehensive review and forecast over the weekend. Sign up for it and the daily reviews for free at chartingwealth.com. And again, write us. Don't text us. Write us, cw@chartingwealth.com. We always love to hear from you. God bless my friends. All the best from the whole team here at Charting Wealth World Headquarters.